Hello, this is Quanru Invest. Today I'll be talking about the market's outlook in general. So in the past few days or so, we've been seeing Trump releasing basically tariffs on every single country. We have tariffs on EU now, and then an extra 10% tariffs on China, and then you have your tariffs on Mexico and Canada as well. And this has led to a market that has been very volatile. So in the past few days, the S&P is down around 4% from its highs. You have the Nasdaq, which is down around 6% as well. And as for all the Max 7 stocks, they're basically all in correction territory now, some of it even in almost a bear market already. So if you've seen the price action or the trading for the past few days, it's always been sort of like a rotation out of the Max 7 stocks into all your different value stocks. And so is it time for you to buy the dip on all these Max 7 companies? So for me, I think it might be an opportunity for you to buy into some of these Max 7 companies now. They are trading at a reasonable valuation relative to the market. So you have Google, for example. Microsoft is trading around fair value right now, and Amazon as well. So I think those three are the main ones that I'm looking at right now. So let me talk about all these three stocks. You have Amazon, Microsoft, and Google as well. So for all these three stocks, right, they have one common business model, which is your cloud services. So Amazon has AWS, Microsoft has Azure, and then Google has Google Cloud Platform as well. So for all these three stocks, the best one by far in terms of the quality is AWS. They have around 240 different software inside. It's the most well-developed one. They've been developing it since I think around 2000s or so. And that's why they're the market leader in the sector. So that's Amazon's competitive advantage. Next will be Microsoft. So Microsoft is the company that is able to bundle everything together the best. So they are able to bundle all their different Microsoft Office and all that, and then link everything together and sell it to their customer. And then last one, Google. So Google is by far the least developed now. It has around 160 different softwares compared to Microsoft's 190 and Amazon's 240. So the good thing about Google, right, is they have a very big total addressable market, meaning they have a very long runway of growth because they only have around 10% market share right now, compared to Azure's 20 and Amazon's around 30 plus. So Google's sort of competitive advantage right now is they're trying to undercut on cost. So everything that they're selling to their customers, they're selling by per hour, and then they're bundling everything together to make it a lot cheaper for their customers so that they can gain more market share. I hope to see them transitioning into more of like a profitable business model, meaning to say I want them to increase their value to their customer instead of undercutting on cost to gain market share. But they're still relatively new, so I think it is fine for now. So if you look at all these different, you have all these three different cloud providers, Google is the one that is by far growing the fastest. I mean, it's the smallest, that's why it's growing the fastest. And then you have Amazon and Azure growing basically at the same rate. So back to all these three different stocks, which one is the best sort of buy right now? So you have Google with Google Search, you have Google YouTube, you have Google Cloud as well, and then you have Amazon with AWS and the retail business and all the different advertising businesses as well, and all the different seller provided services, everything bundled together as one big company. And then you have Microsoft as well with their business productivity sort of like bundle. You have the personal computing portion as well as Azure. So if you look at just the valuation alone, I think the best company to buy right now is Google. But for the company that I think is the best quality out of these three for now, right, I think it is Microsoft. Because if you look back at 2018, 2020, and 2022 as well, when we had a big crash in the tech stock market, Microsoft actually grew revenue in all those 3 years. On the contrary, Google's revenue had a big plummet in 2022 after the market crash. Same for Amazon as well, they had a big crash in 2022 in terms of their earnings. So out of these three companies, I think the company with the best predictability is Microsoft, and that's why it is priced slightly higher compared to its peers. But the company that I think is the best buy right now is just basically Google. If you just value Google by parts, so you split Google up into its different segments, you have YouTube, you have Google Search, and then you have Google Cloud as well. So if you value all these three by parts, right, if you compare the three different segments to their market competitors, so for example, Google YouTube with Netflix, Google Cloud with AWS and Azure, and maybe Google Search with, basically just put it at 15 PE. If you sum all these parts together, Google is still undervalued. And it doesn't make sense for this company to trade like as if it's a dying company. Microsoft as well, I don't think it's deserving of this current price right now, especially for the predictability in this company. In this market condition, it deserves to be a lot higher than its peers. As for the story on Amazon, I don't own the stock yet, but I feel that Amazon's story is simply just one of margin expansion. Meaning to say, I want them to hold their AWS margin. Their AWS margin is extremely high already. It's around 37% operating margin. And I want them to grow their other segments as well. So a lot of the Amazon business, right, most of them, in fact, in retail and all that, they are not profitable, and that's what I don't like with the company. So you have AWS at 37% operating margin, and then you have everything else at 5.7% operating margin. That is just terrible for the company. But the good thing is they managed to increase their margins from around 1% to 5%. That is a very big jump in just 1 year. And so I'm looking into this company right now, Amazon. The price to operating cash flow now is still relatively low compared to its historical averages. So I think it is maybe around fair value to maybe slightly undervalued, but I want a margin of safety.